G'day folks, Jim here from Orchard Forex. It's Saturday the 29th of August. Well, the markets have just closed for the week, and the action was in the foreign exchange markets for once on Friday as traders repositioned themselves after the Jackson Hole Symposium, while also seeing some volatility after the Japanese Prime Minister's surprise resignation on Friday in Asian time. Sterling, Aussie and Kiwi were all particular beneficiaries, moving up to sort of 1 to 1.5%, and we'll take a look at those in a minute. The US stock markets ended the day up by around 0.5%. European markets went the other way, down by around 0.5, 0.6%. The S&P and the Nasdaq both closing the week just below their all-time highs, and looking capable of heading higher in the near future, but particularly after the Fed outcome on Jackson Hole and ahead of the FOMC meeting, which takes place on the 17th, 18th of September. Gold and silver remain highly volatile, but seem likely to remain underpinned by the weaker US dollar. And that looks as though it can continue. And the other interesting thing we might take a look at is copper, which seems to be about to break significantly higher, and which won't hurt the commodity-based currencies at all. Anyway, we'll go and have a look at the charts. Actually, before we go and have a look at the charts, we'll just have a quick look at the trend table. And as you can see, there's a fair bit of green here. Sterling, Aussie and Kiwi in particular look pretty good for a move higher, so I'm in the camp of looking to buy dips in any of those. Dollar yen is going to remain very choppy. Dollar Swiss I'm not really sure about. The euro failed to take out its previous highs, as I'll show you in a second in the charts. I think it will, but it's not looking really quite as dynamic as the other currencies here. As far as the dollar index, it's a bit messy, but I do think we're sitting on some big support, but I think we're probably heading lower. The stock market's looking a bit neutral in the short term, but both the S&P and the Nasdaq are toying with their all-time highs, and I think we'll probably take those out. Gold and silver both look a bit choppy, but I think they'll probably move to the top side eventually. Oil's just sitting at sort of $43 a barrel. That's not worth looking at. And on the crosses, I'm beginning to look at the yen crosses, as I'll show you in a second. Elsewhere, it's all a bit messy. Euro sterling looks as though it could see further downside, because sterling looks pretty punchy at the moment, although any negative Brexit headlines could see that turn around fairly quickly. So I'm a little bit dubious about euro sterling, but we'll go and have a look at the charts. I'll start with the dollar index. This is a monthly chart, and as you can see, we finished the week near the lows at 92.30, sitting on very important support going all the way back here to 2011. Below here we have the 100-month moving average at 91.70 area, and if that gets taken out, then we might be looking at quite significant losses. That remains to be seen, but the monthly indicators are pointing lower. Closer to home, the dailies are, as you can see, we're sitting on this support, possibly a little bit of bullish divergence, but there's not really any positive momentum there. So I suspect the dollar is going to continue to have a hard time. And looking at the weeklies, as you can see, they do have plenty of downward momentum. We're going to get this support here, the FIBO support, 76.4 of this entire rise. That ties in with that 100-month moving average I showed you just now. So that's going to be pretty significant, and it's going to require a break of that support. But I think that the dollar's probably going to put up a bit of a fight if and when we see it. So heading on towards the individual currencies, starting with the euro. Okay, here we have a 4-hour euro chart. Now the euro actually relatively underperformed on Friday. Did close above 119 just, but it's been unable to take out the previous high here seen earlier in the month at 119.65. The 4-hour charts are pointing a little bit higher, so I think we could see some upside pressure on Monday. And looking further out, the dailies are suggesting that we've been consolidating and allowing the indicators to unwind, but I suspect that The US dollar, as I say, I think is going to remain in trouble. So if we can take out 1965, then we're going to head up towards 120 and possibly up to this FIBO level up here, which is at 121. That could take a while. The euro's going to have problems of its own. Coronavirus, it seems to be making a comeback in Spain and France in particular. So I think the upside for the euro is not going to be easy, but I do think that's probably the direction of it. We go further out to still. We've closed above this long-term trend resistance here on the weeklies. Let me just blow that up. And I suspect that we are, as I say, going to head higher. The weekly indicators do look positive, possibly slightly overbought on the stochastics, but which might ensure further consolidation. But ultimately, I do think we possibly head higher. Dollar yen, I won't go into the yen because dollar yen because it's really just very choppy. We saw this movement after Abe resigned on Friday. The more interesting things to look at on the yen are the crosses, and we'll get there in a few moments. Sterling had a good session. It's up at levels last seen way back here in October 2019, 133.5, and it seems well that the daily indicators do look a little similar to the euro, but sterling's making new highs. So euro sterling obviously had a poor day on Friday with sterling strength sending across lower. I think we're probably headed higher in time. A lot depends on Brexit, of course, and it does appear that the EU is heading for a no-deal Brexit, which might put further upside momentum into doubt. But the weekly charts are beginning to point higher. So I kind of like sterling, and I think my target really initially is for this 38.2, which is sort of up around here, so 135, 136 up that level. So we'll look out for that. So I would be buyer of dips. Dollar Swiss, I'll give a miss too. That's too hard. Aussie and the Kiwi both had good days on Friday. 73.65 the Aussie. It's up about 1.5%. This is an hourly chart, slightly overbought. We've got the RBA tomorrow. The RBA are not going to like the Aussie up here, but I don't think they can do a lot about it if the US dollar continues to weaken. The 4-hour charts are suggesting we are headed higher. The dailies, likewise, they've been correcting lower, but the Aussie hasn't really come off. It's been tracking sideways for some time, and maybe we're beginning to see a new leg to the top side. And I think we're probably heading up towards here around 75 cents and eventually possibly a fair bit higher, but take it one step at a time. So I would be a buyer of dips. As I say, we had a big 1.5% move up on Friday. I think the RBA will try and talk the Aussie down, but to me it looks as though it's a buy on dips scenario, so take an opportunity if you get one. The weeklies are definitely pointing higher. And we've closed the week, let me blow that up, as you can see, above the 200-week moving average. Took that out on Friday, and now it seems to me as though we could go higher, particularly if stock markets go higher, which I think they will on the back of a weaker dollar, which all comes about following the Jackson Hole symposium. And yes, I think 75 cents is possibly the next stop for the Aussie. Kiwi similar. Kiwi's up against resistance here. Had a very good day on Friday. It was up about 1.7%, I think. But it's up against this 61.8% of the whole drop, which down into March when the stock market's kind of bottomed out. And now we're back up here. We've yet to take out the 200 week moving average, which is up here 68 cents. But if we go back to the 4-hour charts, we have made a new high, and the dailies, as I say, once we've taken this level out here, then I do think the next immediate high is going to be this top here, which around it ties in as well, about 68 cents, and then these highs up here, which are approaching up towards 70 cents. That's some way off at this stage, but I think that's the direction of it. Going towards the crosses, Okay, so here we have a weekly Aussie yen chart, and as you can see, we're approaching significant resistance here. This trend line going back to 2014, but the weekly indicators look good. So once again, looking to buy dips. Once this is taken out, if it's taken out, we've got this sort of 61.8% FIBO level. That is at sort of just 78.5. And then we've got the 200-week moving average, which is up at sort of 79.60, and then of course we've got the big figure of 80. But I would be looking to buy dips, and good support should come in here around this sort of 77, 76, 90 level, these two previous highs. So I would be buying into any weakness with a stop loss placed below that on a daily closing basis. And Kiwi yen, much the same. It's running into this 100-week moving average at the moment. So we got the 50% pivot of this move down, and the trend line going back to 2014 all ahead of us. But I do kind of like it, and I think once again buying dips. And if we go and look at the daily charts, I would now be looking to buy dips to around this sort of 70-60 level, maybe a little bit lower, 70.5. But overall, I think we're probably going to take on this resistance up here at 72, and once above there, if we go out to the weeklies again, you know, then it's really a move towards sort of 74, 75 that we're looking for. Sterling yen had a good end to the week, and I think that looks particularly good. It's trading here at 140.75. Having had a really good session on the upside on Friday, and the weeklies, we're in this channel, and that may well contain it for a while yet. And this resistance here around sort of 144, the top end of the channel, will be fairly toppish for it for the while to come. But if we go and I've got a chart here. Now this chart was provided by some good friends at Reuters, and at 142 here, the channel I was just showing you is that just this little part here, but this goes back to 1979, 1980. So we're on the verge of a very significant break, I think. So that's not till about 142, as I say, but it's worth keeping an eye on as and when we get there. 144, the top of the channel, will be tough to break through, but once, if and when we're through there, then I don't see any real reason why we can't sort of head up towards 150, 160. So that's a longer term trade, but just worth keeping an eye on. Okay, so enough on foreign exchange. We're going to have a look at the stock markets, which just seem to be pushing. This is the S&P daily chart, and they basically seem to be pushing onwards to new highs on a fairly regular basis. And I don't think that's going to change, given that the change in stance from the Fed at Jackson Hole last week, and looking forward to the September meeting, FOMC meeting, as I say, 18th of September. So until then, I think it's probably a case of buying the dips. We've closed the week above 3,500, so I think you probably buy the dips with a stop loss probably just below 3,400. It's a bit of a deep stop loss, but that's the way of it at the moment. And I think, as Goldman Sachs predicted last week, we're going to be at 3,600 by Christmas, and at the current rate of progress, it could be well before then. The weeklies are still looking very, very bid, albeit that the RSIs do seem to be running out of steam. These FIBOs need updating. Okay, that's better, but these are a long way off. They're the long-term FIBOs, and the shorter term obviously come off this fallout, the pandemic low down here to the highs, but even that's a long way off, and the 23.6% is coming in under 3,200. So I don't think we're going to see that again for a while. The Nasdaq's pretty much the same. Have a look at that. There's no stopping the Nasdaq. It's now above 12,000. Gosh, it was only in mid-June it broke above 10,000, and it's had a 20% rise since then. So it's pretty hard to stand in front of a moving train. The weekly charts are hugely overbought, and the RSIs are running out of steam. So we need to be a bit careful. I'd be keeping stop losses fairly tight, I think, but right now, it just seems a one-way run to the top side. So moving along to gold, and that's been pretty choppy recently, although it did have a 1.5, 1.7% move higher on Friday. This is a 4-hour chart, and we seem to be reaching the apex here of the consolidation. If we are to see a weaker dollar, then the gold price should move higher. We're going to run into trouble around this $2,000 an ounce level, but if that gets taken out, then we can move back up to this sort of 2070 area and possibly higher. Remains to be seen. On the downside, which I think is less likely, a break of 1900 or so down around here, that would allow us to move back to this 1870, 1880 level, 1860. But I think in the longer term, gold is probably a pretty good bet for a topside move. The Fed seem to be gearing up for a lower dollar, so I think I'd be buying dips, as I say, anywhere below 1900 now would be a reasonable place. Now, I guess you put your stop loss really down below this level, probably below 1835. That's a long way off. It's $130 away, but below the FIBO level. But as I say, I wouldn't really be buying it here. More choppy trade could follow, and we could see another move back down to this sort of 1910 level quite easily to test the support again. But I would be looking to buy dips. Same applies to silver, really. We'll have a quick look at silver, which is doing much the same. And I think eventually we will take this out, and 29.85 was the high here. Eventually, though, I think we're going above 30. If we go and have a look at the weekly charts, which I've shown you before, the initial target, well, the initial target is this 29.85 level around here, but then above here, the 50% pivot is at around 30.5, and if we get beyond that, well, then we're heading quite a bit higher, but I think that's a way off yet. But the weeklies are pointing to the top side, and the monthlies equally look as though we could see quite a move higher yet. Okay, the last thing I'll show you is the copper price, which made its highest close since June 2018, and I think we might be about to see a significant move higher in copper. Just failed to close at 3, but if we look at the monthly charts, as you can see, we're breaking to the top side now. As I say, this is a monthly chart, and it's the end of the month on Monday. The indicators are pointing to the top side, so I kind of think that's going to move higher, and that won't do the commodity currencies any harm at all. So something to just keep on the background. If you trade copper, I would certainly be looking to buy dips or to be long, but I also think the Aussie and the Kiwi will be beneficiaries of seeing a higher copper price. Before we sign off, we'll just take a quick look at the calendar. And this is from today, Monday. The main event will be the PMIs out of China, the manufacturing and non-manufacturing PMIs. And then later in the day, we get the German preliminary August inflation numbers. Tuesday, the main event of the day will be the RBA. The RBA will not like the Aussie being where it is. They'll try and talk it down, but as I said before, I think looking to buy the dips is the way to go. The EU CPI comes out on Tuesday. We've got the ISM manufacturing prices paid figures. That'll be fairly important. Most people, though, we got the Q2 Australian GDP on Wednesday, and then Thursday there's some more Aussie data. We've got all the services and composite PMIs, but the main event of the week will be the US unemployment numbers on Friday, where the figures are supposed to show a slight improvement in the overall headline rate, coming down from just above 10 to just below 10% headline unemployment rate, while the non-farm payroll is expected to come in at 1.5 million as opposed to the previous number of 1.76. That remains to be seen. So that's about it for this week, folks. I'll put out another video during the week as and when I see something worth saying. And until then, good luck with your trading. Cheers.